Candle Range Theory Trader, back with you with trend following with Candle Range Theory. It's going to be a deep study for serious students only. So we're going to go over every bit of trend following with Candle Range Theory. So let's not waste time and get right into it. We're going to cover why trend trading is important, the baseline indicator, the 50 EMA, how it should appear on your chart, the Candle Range Theory pattern. We're going to go over how to put those two things together, some things to keep in mind, some variations, how to backtest on a live chart as well, so you can find your own CRTs in the chart. So why is trading trend the best way to trade? It does capitalize on momentum. Okay, you want to be with the trend, not necessarily against it for longer and more powerful moves. You get very clear signals. So, you know where to get in, you know where to get out. Risk management is much easier. Your the notion of it going across markets is phenomenal because what I'm going to go over, the timings are going to be specific to the Forex market, but it also works on stocks, Forex, and crypto. So, it's all universal in terms of behavior, in terms of price action. You do get higher risk to reward when you're trading trend and can catch a good one. And this works either with a small or a large account. Okay, so either way. So now, the indicators you're going to need on your chart are going to be just the 50 EMA and the mark levels indicator. And you need to be sure your mark levels indicator uh, finds the current high of the day or low of the day and the daily open price. That's all mark levels need to show. You don't have to worry about prior day low, prior day high, weekly high, and all that type of stuff. You don't have to worry about it. Okay, so first off, when it comes to your chart, how you want it to look, the 50 EMA, which is our baseline, it needs to appear a certain way on the chart. Now, the 50 EMA, in terms of price action, is going to show you the strength of the trend, or at least that's going to be our main mindset going into this. First, I want to show you what you don't want to see. And let's remember our rule with our trend, okay? Because when it comes to the 50 EMA, our reasoning is this. If price is above the 50 EMA on the 4-hour chart, that's our big picture time frame, we are going to look for long candle range theory price action. If price is below the baseline for the EMA, we are looking for short candle range theory price action. Okay, so above, we're looking for longs, below, we're looking for shorts. It's that simple. Do not complicate that. I've given you everything you need, okay, with detecting trend. Okay, detecting trend doesn't have to be hard. Now, once again, when the baseline is flat like this, see our price is just side to side, range bound. This doesn't mean that you can't trade here or aren't good setups here. Like a long here would have worked. A short up there could have worked. A long down here, well, that's a long, but a short up here, obviously, it's just chopping. Okay. Now, but are there some long opportunities below it? Yeah, but at the same time, we're looking for shorts. So when the EMA is flat, you just want to stay out. And it's flat for a long time. This is from October. What is this? Like the 1st of October all the way through the 9th. So that's 9 days. Well, about 7 days, we'll say, because it starts to form an angle here. But about for a whole week, though, it's not doing anything. Okay, do you have the patience to not do anything on a pair? So if you're trading one pair, this is like a week off. I like to see something on a daily basis. So let's take a look at what we should see. When it comes to having a short trend, what you want to see is the 50 EMA at an angle, a downward sloping angle. And if price is below it, you're just looking for short candle range theory patterns. Now, while I'm going to get into the details a little later, here's one right here, down. Here's one right here. Price spikes up above this one, goes down. This goes down. This sweeps a high here, goes down. Yeah, so that's those are the main moves right there. Okay, so that's the type of price action we're looking for. This, kind of this, and more so this. All right, and obviously it does start to retrace. The trend doesn't necessarily last forever and ever, but you're going to see the power and strength of these downward candles because we're trading with the trend. So as well, same thing in reverse. See that 50 EMA at an angle, an upward angle is pointing up. So that's a clear sign. Okay, the odds are better to go long, and you have a long price action here. You got a little bit here for the sweep below this low. Kind of plays around with a little bit, but eventually here go your power moves right here before this big correction candle right there. And also right here, too, you got these lows being swept. So when you have an EMA pointing towards the upper right or bottom right side of the screen, That's where you know where your trend is. And then the EMA flattens out, and see again, we get this consolidation back. We're not trying to trade that. And we only want to trade this. So when we put it all together, when we zoom out a little bit, okay, we got the golden zone is where you should be trading. If you got a sloping EMA, you're looking for shorts. If it's kind of flat, you stay out. Sloping again, you're back in looking for shorts. It's kind of evening out. Like I said, I'm not saying there are zero opportunities in these levels, but it's just the odds. You want high odds. Where are the odds the highest? Prices above the EMA, and it is making those candle range theory patterns. See the power of these moves here and here versus the chop here. Don't trade chop, trade the trend. Okay. So your job is, like I said, just to find those zones where right there, find the candle range theory there, right there. Okay. If you're tempted to go long below the 50 EMA, just don't bother. Okay. Train your mind to be disciplined enough to say, you know what? I want to catch this. It's more than enough to catch this type of price action. I'm not trying to go long below the baseline because that's not what my rules say. Stick to your rules, and they're more easier to see and to follow. Okay. All right. Now let's get into our steps on finding a trade. It's based on the daily price action. Like I said, you don't have to worry about prior day low, prior day high. It's just isolated or confined to one day. So step one, be sure that price is below a directional EMA, which means that, it's below the 50 EMA. When I say directional, that means it's sloping, okay, or at an angle. It's not flat as I've just talked about. This is the 4-hour chart. When you come to the chart, your first range candle should make the initial high or low of the day. All of these are going to be short examples for the illustration, but you just reverse it for longs. I know you can do that. So I didn't make charts of both, but it's just the same thing in the opposite. Okay, so this price action here is just flipped if it's above the baseline, 50 EMA. All right, so your range candle should be the first high of day. The real high of day should be made by the next 4-hour chart. So let's say if this is the 1 a.m. 4-hour candle Eastern Standard Time, this is going to be the 5 a.m. Eastern Standard Time candle. The real high of day being made between 5 a.m. and 9 a.m. And then you start trading after this candle closes inside the range. All right. This is where you start trading. Some people just take a entry and on this candle's open. That's fine. But there's other tips and tricks for that too, which I'll show you in a second. But this is pretty much the perfect setup here, where you see this, a smaller money candle that makes the real high of day, and then strong moves to the downside. Because we're trading with trend, we do expect price to break out of the range. So you can hold for 2 or more candles. All right. So sometimes you may have a small range candle. That's more than fine. That creates the first high of day. The real high of day being created on the very next candle. And then we start trading after these 2 candle close. So these trades take 8 hours to set up. You're not watching price for 8 hours. So what you can do is just set an alarm for, let's say if this is 1 a.m. and this is 5 a.m., you want to set an alarm for like 8:55 a.m. Eastern Standard Time. Give yourself about 5 or so minutes, 5-10 minutes to look at the charts to look for this type of price action below the baseline. And you just start trading once this candle opens, So, and that's pretty much it. But sometimes small candles do lead to big ranges. Now, the reason this candle here is gray is because sometimes this candle will be green, sometimes it'll be red. So it could be either one. The candle color doesn't matter. What matters is that price action closes inside this range high. Okay. That's what matters the most. And then you start getting in. If price closes outside of it, that's not ideal. So here's some real examples. So I've just showed you, this was the 5 p.m. candle. This is the 1 a.m. candle, which creates the first high of the day. All right. See that? Let me go back. Okay. First high of day, real high of day. First high of day, real high of day. HOD, the mark levels indicator, will give that to you. All right. And sometimes when price pins the 50 EMA, this can be a great sign of a strong move because people often buy above the 50. Okay. But those people don't know that we're trading trend because the EMA is pointing downwards. So we believe we're in a bear market. Now, as well, keep in mind that if your price is near the baseline, but the trend is still down, if you get in near the baseline and ride it down as this price starts to retreat from it, you can really hold it for a little while. But in any event, we start trading at 5 a.m. because this is 1 a.m. and then 5 a.m. starts well, let me make sure. Oh, I'm sorry. 9 p.m. was the range candle. 1 a.m. created the real high of day right here. So 5 a.m. is when you start trading. So now let's look at the entry. Now this is the 5-minute chart. You take all entries on the 5-minute chart. You remember that all trading takes place inside the range. So this would have been a 5 a.m. entry, and you can set your stop loss right outside the range, which in this case would have been 10 pips. So, pardon me, price did do a straight drop. Okay, but this is the entry right here. This was 5 a.m. So in essence, what you could do is as soon as this candle closed right here, you just enter right at 5 a.m. right there. And that's it. So let's take a look at how it played out. This is your entry. This is a bigger picture. See already how the 50 EMA, this is zoomed out. Strongward down slope. Range candle, money candle, trend. There you go. Okay. This was by, the entry was on Tuesday. By Thursday, price fell 88 pips. So if you're risking a 10 pip stop loss and got 80 pips plus, that's a 1-to-8 risk to reward ratio. So if you risk $10, you would have made $80. If you risked $100, you would have made $800. If you risked $1,000, you would have made $8,000. Okay. All that matters once you know what you're doing is how much capital you can have access to. All right. But that's what you're looking for. Price broke out of the range on the very next candle and did not come back. So there you go. That's that. Let's take a look at another example, a long one. So 50 EMA, I'm always looking at the 50 EMA first. Is it at an angle? Yes. Okay. Is price above it? Yes. All right. So now I'm looking for my low of the day range candle here. And then my new low of the day here. The money candle creates the real low of the day right here. So in this case, trading started at 9 a.m. So this is the 5 a.m. range candle that had the first low of the day and then a new low of the day here. I'm sorry, this is the 1 a.m. range candle. I'm sorry about that. This candle was created at 1 a.m. This candle was created at 5 a.m. So once this candle closes, 9 a.m., we start trading. The entry, good entry would have been between 9 a.m. and 9:45 because notice here on this 5-minute chart, price just consolidated. It didn't do much of anything. So you have plenty of time to get in. You don't have to, sometimes these trades move fast, but other times they'll give you time to get in. So this was a 45-minute window. You had to take a long. And it even was nice enough to give you another chance at 12 p.m. because it did retrace before making the big move. So this was our entry right here. Okay. And notice the strength of the slope. That's what I really want you to focus on. Okay. This is not a flat 50 EMA. Strong trend means it's pointing upward. All right. So that's our entry. Price broke out of the range. And so this would have been a Friday entry and holding over the weekend. Monday by 9 a.m., you would have got the strong power move up. Now you may be wondering, well, how long should the breakout be? I can't predict that. Price could break out of this thing and really just take off. I'm content with anywhere from like 1 to 4 to 1 to 5, 6. I just showed you when I was 1 for 8, but hey, I say I like strong moves. When I see strong moves, that tells me, okay, this trend is just about over, or this move is just about over before we see a retrace. So if I see, you can always hold to the candle close. If you would have held to this candle's close right here, this would have been at 9 a.m. This would have been more than enough for me. Okay. But see, this candle close and then this candle close and then this candle close, holding through all those closes ensures that you see at least where the candle closes at. So if you have the patience for that, do that. Just see where the candle closes at. So now these are some things to keep in mind, aka some variations. There will be times where you'll see a range candle create the first low of the day and then no real small money candle. What do I mean? This right here was both the money candle and the distribution, or at least the start of the distribution, all in one, or the strong move, because this is the low of the day. What do you do if that happens? Because ideally, we like to be in close near the candle range theory's low. You can use a fib and just use the 50% level. Okay. I'm not big on fibs. However, if the move comes and you miss it, or if this price action is too much, see if it comes to retrace in the 50% level. So let's take a look at the entry on the 5-minute chart. This purple line right here is the 50% level of the money candle. Remember, the money candle is the one that creates the real low of day. So you want to be in as close to the 50% level as possible. So right here, you had plenty of time from about 4:10 until about 7 a.m. So you had hours to take a long here. Okay, so once again, this red candle, sorry, this green candle right here provided the money candle. The money candle is always the one that makes the low of the day. So if you see this where it just goes boom, boom, you may have not missed it. It's just, but you do need a retrace. Don't buy all the way up here. You want it at a discount. Okay, so you want it when it's on sale. So see if it comes back. It gave you, like I said, plenty of time. These are 4 hour. This is a 4 hour chart still. So this was 4. This was 8. This is 8 hours of consolidation. But remember, small candles can lead to big candles. All right. So we take our entry around here near 50%, and look at that result. 100. This was the entry right here. Price broke out of the range. And remember, I told you those strong moves. Bang. Between Monday and Tuesday, price rose 117 pips. So if you had a 10 pip stop loss here, this is a 1 to 7, well, actually a 1 to like 18 risk to reward. Now, is this the norm? No, it's not. Okay. But yen pairs, they got some very strong moves. Yen, as far as trend goes, I will say this. Yen pairs to me trend the strongest and the best, more than any of them. That's just my opinion. Okay. So yeah. But 178 pip move as the breakout. We expect the breakout. This isn't the breakout. This is what we want to see. When you start seeing that, okay, let's get ready to kind of get out here. Okay, so there you go. So that's an anomaly, though, or it's an exception. So again, don't get discouraged if you think, oh, I missed the move. No, just use a fib 50% and try to get in around the middle of the money candle. What is the money candle, though? It creates the low of the day or the high of the day. Now, not every range candle will break out immediately, or you won't see a breakout. So I hope this isn't too hard to see, but if you see where my mouse is right here, okay, so here's the range candle here for this day. This red candle right here was the money candle, and this was our entry right here. It did complete the range, but then price came back. All right, we got a strong slope, but if you would have held this entry, you likely would have got stopped out because price came back. It bounced off the baseline, then it just broke out later, right? So this trade right here, either you could have just taken your profit here, or it would have been a small loss. Okay, so you do have options though. You can always set your, if it goes to the range top, you could take partial profits. You could set the price to break even. You don't have to sit aside and just wait for price to come all the way back, because it can do that though. All right, sometimes it just chops around, bounces off the 50 and then comes back. Right, so you do have options there. But this trade, if you wanted to break out from here, right here, it didn't happen. But you do have options. I would at a bare minimum set this to break even, and then I look for another trade somewhere else and just not worry about it. That way, at that point, it's risk free. Or if you just want to take a partial, that's up to you. Okay. Now, sometimes the drop won't be straight down, but remember that patience pays and impatience costs. This trade had an 8-hour consolidation period. So you have the range candle here that creates the first high of the day. This one creates the next high of the day. So that's the money candle. You take an entry right here when the money candle closes, but then for 8 hours, it doesn't do much of anything. It goes up and then down. And this is 8 hours worth of price action. All right, so you either were in a drawdown for a little bit or a little bit of profit. But remember, the money candle's high has to hold. We see a strong downward slope on the 50 EMA, so we know that trend is short and price is bouncing around underneath it. So this was an entry at 1 a.m. on Tuesday. Let's see what happens. I'll give you one guess. Break out of the range and 125 pip drop by Thursday. So again, from here to here. 1, 2. All that could have been yours had you just been patient. Okay, by Thursday. But again, this was Tuesday, and then Wednesday, Thursday, bang. So let's say on a 10 pip stop loss, that would have been a 1 to 12 risk to reward ratio. But do you have the patience to wait? Sit on your hands Wednesday and just let price trend down through Thursday. And again, those big moves there and mainly here. All right. Say so again, risk reward, man. If you want to go for 1 to 8, 9, 1 to 10, all you need is really one of these a week, and you can do pretty well for yourself. All right. So how to backtest this? I want to go over now how you can find these on your own, because you need to be able to do that. I believe in teaching people how to fish. No one should fish for you or try to give you trading signals. No. So first off, you look at the 50 EMA and be sure it's at a strong angle, up or down. You're going to start with the 1700 4-hour candle, because that's the first candle of the day. And you look for the high or low of the day, depending on what the trend is. You look for the high of the day if your trend is short. You look for the low of the day if your trend is long. You want to mark the range candle, the top and the bottom of it. Then you want to see if there was a decent money candle that made a new low of the day, and you just mark the entry on the 5-minute chart. So I'll do a live example now. I have not. I'm going to do one at random. So let's go. You know what I'll do? I'll do this. I'll pick a random day. Let's just do that one. There we go. Okay, so back in June. So let's see. This is, let me see, am I on the right? I may not be on the right setup here. Let's do that. We'll get our 50 up. There we go. All right. So here we go. So this is CAD yen. I'll start with the yens because, like I said, trend on the yen is just, it's the pair, at least currently, that trends the most for me. So the 50 EMA is at a pretty strong slope right here. So that's good. So let's try this one. Let's see if we can see one. So step one, I put the cursor here, I put it on, and I'm sorry, I'm on the daily chart. I apologize. Let me see. So let me go back to that day, or I'll pick another random day. It doesn't matter. But I got to be sure the 5-minute chart is available. So I'm going to, let's try that one. I can't go back too far. So zoom out a little bit. This one does have a strong slope, so I'll stick with it. So remember the candles I start with fit 1700. So right here at the bottom of the screen, you should see where I put my cursor. And it's 1700. That's always going to be the first candle of the day. Now I wouldn't do this one because the high of the day is up here and it starts at top. So I want to go to the next day where price opens below the baseline, below the 50 EMA. Okay, so here we have one. All right, so this is a 500. This is the 5 o'clock candle that creates the initial high and low of the day. This one here is the 9 p.m. Eastern Standard Time candle. It does create the next low of day, but also looks like it's the money candle as well. This is not the best example only because I don't really trade at 9 p.m., but I'm going to do it for the sake of the price action. So, and so this video is not too long either. So what I'm going to do, I hope I didn't lose it. I think it was right here. Where'd it go? Yeah, right here. Well, no, it couldn't have been. Hold on. 1700. Yeah, this one. All right. So we got this. This is the candle range high. And the candle range low. Now, this is one of those exceptions to the rule because you notice, remember the money candle creates the high of the day. So now let me do a replay option. And I'm going to say this was on Friday. No, this was on Thursday. Well, Thursday, Friday. So we'll do right there. Remember I told you that the money candle, if you see a big money candle and you may have missed the move, that doesn't mean you don't have a trade, but you're going to have to wait for a retrace. So what do? You use a fib. And all you need is 50%. Or around as close as 50% as possible. So here's the money candle. So that's the high day. Money candle's right there. Would you look at that? It hit it perfectly. So let's go to our 5-minute chart. So just because you think you may miss a move, not necessarily. See if price will give you a retracement. You don't need the 50 EMA on the 5-minute chart. It does nothing for you. Don't bother with it. All right. So you would have started trading. Hold on. Let me get the right time here. In this example, you would have started trading at, or looking for a trade at 9 a.m. All right. But you would have had to wait for this retrace because you would have think you may have missed it, but notice where price closed. And even though you may start at 9, you really don't have an entry until about 1. So now let's go down to the 5-minute. That's 1 p.m. Eastern Standard Time. Our best entry would have been at let's go. Well, if you took it at 5, that's a good entry time frame here. It did retrace to it right there. So I may have misstated the time. But again, You want to be in close to the middle of the range. So from about, maybe I'm mistaken on that, 4 a.m. to about 5 a.m. Eastern Standard Time, London. I must have mistook my time, so I apologize for that. Let's go back. Yeah, okay. I'm sorry. I was looking at the wrong money candle. Let me explain why I did that. So let me bring the baseline back up just so there's some continuity here. I was looking at this green candle as the money candle instead of this one, so I apologize for that. That's my mistake. So let's do a replay so that you understand and get the full context of this, because I want to be sure there's no confusion. This is what you would have seen on this day. So let's go through the whole thing, whole trade setup. You come to the chart. Let's say it's like 9 o'clock at night. All right. So let's see. Let me go for one more. All right. So let's see. It's Thursday. Okay. So you come to the chart. It's Thursday night, right? First high and the low gets set. Market reset after Wednesday. Okay. So Wednesday is over. Asia's about to start up. So you have your first high and first low of the day, but you're below the baseline and it's sloping. So you're short. All right. Next 4 hours. Boom. You have a money candle that creates a new high of day and is closed outside the range. So you're thinking, man, the move might be over. I might have missed it. Right? This happened between 9 and 1 a.m. Okay. So now your trading starts at 1 a.m. because you need to draw a fib before the money candle. Only draw fibs on the money candle that creates the high or low of the day. So you do that from the top of the candle to the bottom, and this is your trading range right here. So now let's go to the next one. Bang. Okay. It spent 4 hours retracing. You don't have to sit at the chart for 4 hours. Just set a price alert around the 50. It doesn't have to be exactly at the 50, but I would set it right around it. Okay. So let's say if you would have set an alert around here, so it would have went off. So now let's drop down to the 5-minute once again. Let me get rid of the baseline because we don't need it on the 5-minute chart. It serves no purpose. Okay. And if you would have set your price alert around the 50% level of the money candle, right? You could have got in anywhere from 4:20 a.m. going short up to, like I said, about 5 a.m. All right. All right. So that's your entry there. So now let's go back to the 4 hour. So you go ahead and get in. You can do like a 10, 15, 20 pip stop loss, up to you. Okay. We'll bring the baseline back in. Is it off the screen? I think it is. Yeah, baseline's all the way up there. So we love that. And then let's see what happens. Okay. So you're in it. Let's say you take the entry at 5 a.m. What happens next? Bang. Right back outside of the range. You got a strong breakout. And let's give it one more just to see what happens. Okay. He came back a little more. And look at that. Now, okay, this was a Monday, so it gapped. So let's see where Monday closed at, just out of curiosity. All right, so that's one where you probably would have wanted to take profit on this gap because it did come all the way back up, but it did break out of the range. So if you would have wanted to take your profit, say Monday market open, and I've been in trades like that where just gaps down, definitely take it. So, but be careful holding over the weekend because I've seen some 100 pip gaps too. And look at that, price opened according to this 163 pips down from your entry. So you would have ideally would have wanted to be out Sunday night market open. Okay, because price can't come back. Let me see if I can do a long example of a trend here, because that trade was kind of messy. It worked out, but it was messy. So let's pick one more random day. I'm on the 4 hour charts. Okay. Let's go to May or June, June 9th. Okay. And let's try. We already did a yen pair. Let's see if Euro New Zealand. All right. So here we go. Perfect. Sloping line. We love to see it. So this is our golden zone. So we're looking for candle range theories here. So remember, I start at 1700. So let's go and find our first 1700 candle. Okay, so there's one there. A low of the day here. But a new low of the day doesn't get created right there. So I don't like that one. So let's try to find another day. 1700 there. 2100. Doesn't quite break out though. Of course, hindsight's 2020 because we see our price came back down. Now this day looks interesting. So let's see what happened here. Okay, 1700 here. New low of the day created here. And then price really took off. This one would have been an early morning one. Sometimes for the New Zealand pairs, they can work out in Asia. I have found that. So yeah, that's a money candle. So that'll work. All right, so let's go through this. This one's a little cleaner than the one we just did. So remember, I started with 1700, which is market reset. Okay, initial high and low of the day. And sometimes the 5 o'clock candle, 5 o'clock PM candle will make the range. Will make that make the range candle. It's rare, but it can happen. All right, so there you go. Money candle though is here, created at 9 o'clock PM. So let's go to the replay option and see our best entry. Okay, so all this is already over, right? So, I've started, let's say I want to start trading at 1 a.m. for some odd reason. Okay, I decided to wake up early and go ahead and get to do it. So I have a low of day, new low of day, close inside the range. Perfect. I'm clear to trade. I could just as easily go ahead and just get in right now. We get rid of the baseline. It is not necessary on the 5-minute chart. Okay, get rid of it. I don't want it confusing you. And sometimes what you could do in terms of your stop loss is you can set it to make them tighter. You have options. We didn't really talk about stop loss placement. These are your options. You can set it below the weekly low. Let me do this. Stop loss can go, I'm sorry, not weekly low, below the low of day. That's one option. You can put it there. Let me make this line black. So these are your stop loss options. Okay, SL for stop loss. All right, so there we go. So the safest stop loss is below the low of the day. However, it can be sizable sometimes. And the bigger your stop loss, the smaller your position is going to be. So that's about a 24 pip stop. And it's going to cut into your risk to reward. So that's one. The next option, you can put your stop loss outside of the range, like that. That's going to give you, if you enter here, about a 15 to 16 pip stop loss. Okay. What you can also do is look for what's called a swing low or swing high. If you don't know what that is, it's very simple. It's just a low, a lower low, and a higher low. Very easy to see. Low, lower low, higher low. Just 3 little pins. 1, 2, 3. If you're short, you could look for a swing high as well. Same thing. But it's just 3. And Google it if you're not clear what I mean. This is not about that. It's just an option, okay? But if you did that and put it below this most recent swing low and entered there, that would give you a stop loss of, I give it a little breathing room, so let's say 10. I like 10 pip stop losses myself because it makes it easier for me to determine my risk to reward ratio. Okay, but I put it below this most recent swing low. This is the swing low right here. Let me put an arrow on it. Right there. So you can try to look for those and base your stop loss on those. So those are the options. Okay, so you use the range, a recent swing low if you're long. The safest again is going to be below the low of the day, but hey, you got to do what works for you. Okay, so in this case, we'll put the stop loss right there, below the swing low, and our entry will be right here at 1 a.m. And if you get stopped out, you just wait for a price action to give you another trading opportunity and get back in. No big deal. All right, so but let's see what happens. So I'm going to go back to the 4 hour, reset the chart, zoom in a little bit. And if this entry would have got stopped out, I'm going to show you a better entry, but let's see what happens. So we're going to go ahead and enter as soon as the money candle closes. If you do use tight stops, though, you will get stopped out more. I want to be clear on that. All right, so yeah, that one definitely would have been a stop out. So let's see. Let's go back to our 5-minute chart. Yeah, so our entry was here. We would have been stopped out. So guess what we do? Because one thing about the swing lows and highs, they can also give you an entry signal. And you could have got back in right here. Because you have a low, a lower low, and a higher low right here. 1, 2, 3. You don't have to be little pins or whatever. But right when that candle closes, I get back in. Where do I put my stop loss? This time I'm going to put the stop loss outside the range like that. Okay, so you got to be flexible is the point. Okay, you have to be flexible. And this stop loss would be for, so let's just say for that example, I would have lost $10. This one here is about a 13 pip stop loss, 12. Okay, so I risked $12. Now let's see what happens. Back to the 4-hour chart. And if I get stopped out again, I get stopped out again. Oh, well, what happened here? Well, now, would you look at that? Just on this price action alone, if I would have used another, what was that, 12 pips? I'm going to round to just say 10 because I'm not a math person. As soon as this was at 5 a.m. Eastern Standard Time. As soon as that candle opened, it shot up 73 pips. So let's say if it was just a $10 risk, just to make it easy, I would have lost $10 on my first trade and then made 70 on my second trade. 70 minus 10 is 60. So I still end the day in profit, even though I lost. Okay, you don't sit aside and cry when you take a loss. You get smart and look for another entry signal to get in. Okay, but because we expect the breakout, let's see how far it goes. That, I'm gonna be honest, that probably would have been enough for me. And because of what day is this anyway? Oh yeah, that was a Friday. So let's just say we're gonna not hold over the weekend and be satisfied with our $60 profit or a 1 to 10 risk to reward ratio. I'm sorry, not 1 to 10, 1 to 6 risk to reward ratio. I really don't recommend holding over the weekend, especially nowadays. At least as of the recording of this video, I've seen 100 pip gaps. Okay, from Friday to Sunday night open. Okay, so just don't hold over the weekend. I'll let this play out. Obviously, it did. I think we saw it earlier. It did keep going, but I'm not, I'm not the guy that hold for 5 days. I don't really do that. Okay, it did keep going as we do see that. Okay, so yes, all that could have been yours. It did keep trading upward. So if you had the fortitude to sit through all this consolidation and then through the following Monday, that could have been yours. But this was on June. This was on Friday, June 27th. This was on July 7th. Okay, where it went all the way up here. I don't trade like this though. I don't, nah, I'm good. I'm good right here. 1 to 6 on a Friday, I'm good with that. Okay. But I say nothing less than a 1 to 4 for risk to reward ratio. All right. So that's that. So let's finish this up. So I hope you got some value out of that. That's how to back test and find on your own. So again, just to review, you start with 1700, look for the lower high of the day. You're trying to find your range candle. That's why you're looking for the lower of the high of the day in line with trend. You mark the candle that made the first high and low of the day. That's the range candle. You look for the decent money candle that did make the new lower high of the day. And again, if it's a big money candle, use your fib and try to trade when it gets down to 50%. If it doesn't get down to 50%, there's no trade. Okay, so that's it. So some quick summary observations. Remember that your moving average has to have a direction. Stay away from the flat ones. Tiny range and money candles can lead to some very big moves. Do expect a breakout of the range in some capacity. All right. The money candle must, not should, it must create the high or low of the day. That's where you base all your trading action from, the high or low of the day. Do not trade outside the range. All trading should take place inside of the range. What do I mean by that? Let's go back to our simple diagram, the one I drew. All your trading takes place if you're short below this red line. Okay. If you're long, all your trading takes place above the green line. Okay. If it's outside the range, no. We don't trade there. Okay. So when the moving average is flat, you have to be okay doing nothing. That's why I recommend watching as many trades, as many pairs as possible. Okay. Even if you want to do crypto, that's fine. If you want to do indices, that's fine. But don't force a trade where there isn't one. Okay. Trade the easy stuff. I showed you the easiest trade I can muster here. And the stronger the slope or the angle of the EMA, the better. So in conclusion, you're going to see some bearish, and I spelled bearish wrong there, sorry for that, but you're going to see some bearish CRTs above the 50, and you're going to see some bullish ones below it. It happens. Don't trade them. That's not your setup. Okay. Sometimes no CRT trades will appear in a trending market. That's fine. It's just sometimes market will just pretty much go in small, straight little bursts, and there's just no opportunity to get in. That's fine too. Okay. But what the candle range theory does is it isolates the pullbacks, right, for that day. That we can get in on a pullback and then ride the trend up. Knowing when to get into the market is just as important as knowing when to stay out of it. All right. Because you don't want low probability setups. You only want to trade when your odds are the highest. Okay. Would you rather play basketball when it's raining outside, or would you rather play on a nice sunny spring day? All right. Because we expect the breakout, I say for risk to reward, shoot for 1 to 4. You're trading trend here. You expect big moves. That's not a crime. I know some people preach 1 to 1. Some people preach 1 to 2. Here, for this, 1 to 4. Minimum. You should be making 4 times your risk. And if you can get a 30 to 45% win rate, you'll be fine. You will not win most of your trades. You just won't. However, I just showed you how to minimize your risk on the last example I just did. That trade there, my first entry took a loss. But then when I came back and got it, you get a 1 to 6. But you have to keep those losses small. Otherwise, I don't know what to tell you. Risk management is still number 1. All right. But you won't survive if you're taking big loss after big loss after big loss. Okay. So that was the deep study. I hope you got some value out of this. Let's go back to our master pattern just to wrap this up. Okay. This is your bread and butter right here or right here. Okay. The candle range theory below a sweeping baseline, the 50 EMA on the 4-hour chart. Take your entries on the 5-minute chart. I promise you'll be fine. Okay. But risk management is still number 1. This is the easy part. The discipline to wait for these setups and manage your risk and not get greedy is number 2. All right. So remember, be careful with revenge trading. I know we all fall into it, but just when you take those losses, it's just a drop in the bucket. If you keep them small enough, though, when that big wins comes, the winners will more than pay for your losers. Okay. Because you will lose. I'm telling you now, you will lose some of these. But it's okay. All right. It's okay because they'll be small, but your wins will be huge. Okay. So thank you for watching. I appreciate your time and attention, and have a great rest of your day.